on this webinar, Basics of Successful Trading. Well, first of all, I would like to say a couple of words about myself. Christopher Stone, trader, stock markets expert. I've been for over 12 years on the markets, capital markets, also currency pairs, forex, commodities, and also of course cryptocurrencies, because it was quite a good time on cryptocurrency, and I still think it is a good time to trade on cryptocurrencies, and also of course on the other currencies. And that is why we have to know how to successful trading. What does it mean to be a successful person? What does it mean to become a successful trader? Of course, because when we say ourselves about success, we say about successful trading, we say about successful person, and we have to make sure what does it mean. So that is why this today webinars, and I hope that you will get every answer for every questions that may came up to you. Who is a successful trader, and how to gain this success? Okay, of course, let's start about saying disclaimer, risk warning about today's webinar, about this whole trading course, because remember that the information contained in this presentation is general information only and does not take into account your objectives, financial situation, or needs. The content of this presentation must not be considered as eventual. This presentation must not be considered as personal advice. Before deciding to invest in any products or services offered by Forex CFD brokers, we recommend you seek independent advice and ensure you fully understand the risk involved before trading, and carefully consider your objectives, financial situation, needs, and of course, level of experience. We are not liable for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from the use of reliance such information. And of course, remember that Forex, also called CFD trading, carries in a high level of risk and may not be suitable for all of the investors. The high degree of leverage available can magnify profits and as well as losses. You can lose more than your initial deposit, etc., etc. Of course, you can read it by yourself. I only want to make sure that you understand this disclaimer, this risk warning. And of course, let's remember that today this webinar partner is CCITRADERS. And don't forget about the great bonus that you can get, that you can earn. Contact with CCITRADERS and get your bonus. CCITRADERS offers interesting solution for you: $200 free educational bonus for beginners to start the first trade. And I think it is very interesting, because it is for beginners, and it's worth using this bonus instead of losing money by taking the first steps. I know that making first steps is very difficult. I know that we can make a lot of different mistakes. And of course, thanks to this bonus, you can forget about these mistakes. Even if you will make some mistakes, even if you won't be able to make this $200 in more dollars on your account, then you have nothing to worry, because it is bonus for you traders. So also remember that 50% bonus for traders who made their first deposit or replenish an account. And of course, remember about the multi-account manager known as MAM services. So remember, beginners, traders who want this 200 educational bonus, please apply by send mail to support@ccitraders.com. And of course, remember that also that CCITRADERS have a local representatives, so leverage to 1 to 500, and of course, it's an award-winning broker and retail and institutional ACC. So please remember that. And of course, after this quite a while opening, after this this beginning of this webinar trading course, let's go to the main topic. And what is today's main topic? Well, first of all, today's webinar will focus on the following topics. What is success in trading? Of course, what does it mean to be a successful person? And how to create effective plan, trading plan is the it's the very important thing. You have to remember that making your trading plan, you also are making your future yourself. You making this person you want to become, and it is very important to do it properly. And of course, don't forget about the special traders mindset. When we talk about trading, most of all, we talk about a lot of money we can earn, that we can gain by using by trading, of course, which is quite understandable, because making money on trading on capital markets, on currencies, commodities, it is the one thing. But the second thing is how to get there, because it's maybe you know that, maybe you are not already know that, but it is quite stressful job, and you have to do it step by step. You have to do step by step, and you have to know where are the boundaries, what you can do. Can you make money in are you able to make money in every single trade? Well, of course you are. You are able to do that. You can make 100 trades and all it will be profitable, but it's very, very difficult. And if you are starting with your mindset, I have to be right, I have to be right all the time, non-stop, I have to be the best trader, etc., etc., you are just killing yourself with this. So like, forget about it. Let's make a good trading plan. Of course you can make the best plan, but let's make good trading plan. Let's start making money, start money earning on you, because we all know, we all start this adventure on earth, on the adventure in our life, and we are know that we have to earn money. We have to go to the job and make money. And what will happen when money will start earn on us? And it's a quite good thing, especially in trading, because you are able to make from money more money. You don't have to go to job. You don't have to, just come back to home really, really tired, and you are not sure and you are not sure how you're going to pay your taxes, etc., etc. So no, you now, starting with trading, you can make the really, really good trading plan, start your own future, and decide who you want to be, who you want to become. It's a very, very it's a very good question to ask, who I want to become and why do I want to be a trader. What do I mean by saying trader, and how much time will I give myself to become this person? Remember, your future is in your hand. Of course, you can say, Chris, what are you saying? You don't know me. You don't know me. You don't know my past. You don't know my financial status, you know, my financial situation, and so on. Well, you are definitely right, because I do not know you. I do not know that things, but I know one thing. As I started as a trader, I wasn't born as a native English speaker. Nevertheless, I decided, to become a trader. When I go to the city and I start trading, I also think like, okay, I'm not from the city. I'm not from London, right? I'm not a native English speaker, so I'm like someone a little bit maybe worse, maybe not a little. I thought about myself that, okay, so they are, for example, like here. They're, for example, like here, and I am, for example, like here, right? So it was my thoughts about it. But then I remember I said to myself, no, you can decide who you want to be. And I decided to become this person. I start my trading in the city for institutional for many institutions, right? For also, I was trading, was dealing with banks. I was also trading in the proprietary trading firm, and I did it. I really did it. And a couple years later, I am here right now. I can tell about my story, how I became this person that I am right now. So I tell you one thing, and only: decide who you want to become and start making your plan. Start making your decision how to become this person you want to be. And of course, we supposed to right here we're supposed to say, okay, so you said a couple of things, but what does it mean to be a successful person? Is it mean successful person? We mean person who earn, for example, I don't know, $100,000 for month, for year, or maybe $1 million a day, a week, a month. What does it mean to be a successful person? Well, Earl Nightingale said, success is really nothing more than the progressive realization of a worthy ideal. This means that any person who knows what they are doing and where they are going is a success. Any person with a goal towards which they are working is a successful person. It's very, very important that success is the progressive realization of a worthy ideal or goal. It is that simple, and you have to remember that. So that is why question: do you want to trade because you want to feel this excitement? Of course you will, but this is not the point. The point is to become a person you want to be, you want to desire. So make this decision to become the person and to start to believe that you can become whoever you decided to be. So that is a very, very important thing for you, and for, I think, for all of us. That is why the next question is, okay, successful person, and but what does it mean to be a successful in trading? What does it mean to be a successful trader? Well, in this case, the situation is a very, very simple. Success in trading, it's realization your trading plan. Your trading plan. Why trading plan is that important? Why is that so? Why did I set trading plan, and why do I think it's a very important thing? Well, to become a successful person, you really must, you have to know where do you want to go, who do you want to become. You want to be a millionaire. You want to be, for example, trader. You want to be a trader, successful trader. You want to earn money on the capital markets. You want to make money on financial markets. Okay, so now you know what do you want to do. So next, decide how you will do it, and this is the trading plan. This is your way. This is your way. This is the way towards to your life of your dreams. I'm saying the life of your dreams, but I really think it is something like this, right? You have to know who you want to be, how to become this person. You have to have a plan, right? If you do not have a plan, for example, you are saying, okay, I want to become this and this, and then you want to do absolutely nothing. You want to do anything to become a little bit more the person you really desire to be. Well, it's a very, very it's a very low motivation, right? The high motivation is when you know who you want to become. Why do you want to become this person? What will happen if you won't reach your goal? And you have a plan, step by step, how to do it. Because remember, always I'm saying always I'm saying in a webinar, I always saying to the people, people on my trading courses, I always say to them, listen, you have to be you have to know where are you going, because the trading is not an event. Trading is a process. Is a process you can that will help you make more money or lose more money. Let's face the fact: many people many people, especially traders, many people in the financial markets losing their money, and especially in the leverage markets, right? For example, forex. I'm quite sure that many of you heard about people that lose their money, maybe all of the money that they had on their account, maybe even more. And of course, it can happen. But what is the really problem in this situation? Well, of course, the main problem is that they are losing their money, right? So this is the main problem. But the question is, why do they make this kind? Why are they making of this kind of very bad decisions? Well, actually, most of them don't have a trading plan. Like all of us can make, all of us want to make really um, want to make a lot of money. All of us. I'm really quite sure, like 100% sure that most of you will say, okay, I want to have a lot of money, right? Of course, how much is a lot of? It's for every person will be a different amount. Nevertheless, if you are if you are want to make a lot of money, you want to have a really good life, so for you, for yourself, for your children's for your children, for your families, it's very understandable. It's a normal thing. But the first thing is, the main thing is, do you want to only to make a lot of money, or do you want really you want to really go to this goal, let's say the better life? So if you really think that this life you're living right now, it's not the best thing, it's not the best of you, so let's decide to change something. Let's decide to change something. If you are able to trade, to become a trader, start making plan, traders plan. And if you are building your trading plan, the first question is, why do you want to trading? For excitement, for money, for prestige? What is the main purpose that you are interested in trading? Well, it's a very important thing to answer this question, because if you will answer this question, if you can answer this question, you can also answer the question: what are your goals? What are your main goals? Who do you want to become, right? And how do you want to achieve it? I'm sorry, is there some kind of problem with speakers, with hearing? Just please let me know, because I'm reading that someone has a problem with hearing. Hope that everything is all right. Okay. I hope that everything is okay. So please let me know if there will be any kind of problems. Okay, so the thing is, do you have a strategy? It's a very important thing, strategy, because strategy is the base. It's the basic of your trading plan, right? And if you don't have any kind of strategy, then is a quite really problem, right? Because you are not able to make any money. Okay, is your strategy is consistent with your goals? Well, of course, goals are making money, right? So any strategy will be good, any profitable strategy, of course. Nevertheless, if you are saying about your goals, about your strategy, it's a very important to start set. How are you going to make it? Because if you want to be a day trader, this is your goal. This is the way you want to make money on the financial markets. Well, you have to your strategy had to be consistent with this kind of a plan. So also the question is your strategy is consistent with your goals. It's very important to answer. Okay, is this consistent? No, it isn't. No, it isn't, because we can you can modify it, right? You can say, okay, where are you right now? Where are you going? And so on, so on, so on. Okay, so when you are creating your strategy, first of all, you have to answer question: what is the signal for opening position? Of course, it could be open. It could be open buy or sell, and you probably know that because you are on this webinar. You can also trade on long, short, so you can buy or sell. It's whatever you think the market will do. And the next question is how often it appears. And this question about appearing this signal, it's important because many of the traders are wondering if you want to, for example, trade. If you want to, for example, trade as not a day trader, but for example, a swing trader, maybe some kind of long-term trader, because you are working, get a full-time job, and you want to trade to make more money, right? But you don't want to become a person that only lives through trading. Well, in this case, the main question will be how often it appears, and if you are able to be in front, not of course in front of your in front of your PC or some, just like, but in front of your PC, because you can also trade on. mm, Also, you can trade on your iPhones, your smartphones. Nevertheless, if you are if you are working in a full-time job, well, probably there will be problem to trade. Of course, there are jobs that you can trading and also working. You can also have a full-time job, right? But if you had a full you are in a full-time job and you have to focus on this job, well, it will be a problem. So there is why you had to ask yourself, okay, how often it appears? I will trade evenings, I will trade at morning, or when, right? So it's a question for you. The second, very important, is stop loss. Stop loss, where to set it. Where should supposed to this stop loss? Where should it be? Well, now you can of course ask me. You can ask me, why did I start with stop loss? Why did I start this? Why do I start this strategy, creating our strategy after open position of setting the stop loss? Well, the maybe you know why. So if you are one, maybe you know. So please write it. Please write it down. Maybe because I started with stop loss because most of us think about profit. Think about the profit, and it's really very it's a very normal thing, right? We are started trading because we want to make money on financial markets. If we are not able to make money, we get frustrated. And if we are thinking about the stop loss, we are thinking about loss or profit, well, then we are thinking about, then we are saying, for example, about a loss. It is something we have to. It is something we have to pay, right? Sometimes we will lose our trade. It's a very normal thing, uh, absolutely normal. Where we starting with, sometimes we will be on a loss, we'll be on a stop loss, and it is normal, of course. the great thing is when most of the time we are on the take profit. It is a great thing, right? If we are only we are only cashing out this money, then we feel like really, really great. We did a great job. But remember one thing: if we are setting stop loss at the beginning, because we now know where is our risk. It is stop loss is the point in the chart that we are saying, okay, we didn't have right in this. We didn't say we were just wrong, right? We're wrong. It's a normal thing, because the trading is not a person that is willing to become a person that always is right. It is not the point of being a trader. The point of being a trader is not to be a person that is always right. It's a person that earning money on financial markets, and that's it. And remember this. So my question is to you: do you want to make money? Do you want to have a right? If you want to have a right, okay, it's your choice. For example, I don't have to be right all the time. I could be sometimes. I can be wrong. For me, most important is after 10, 50, maybe 100 trades, I want to see a profit. That's it. Period. And I don't care if I will lose money in my first trade. I don't care if I lose money in my 80 trade. I want, when I'm done, when I'm finished, I want to see a cash on my balance. I want to see a profit on my balance. It's it. There is this simple. So when you are setting the stop, when you are saying the stop loss, you are saying, okay, so I was in this, I was wrong, and I have to cut this position. But why even use it, this stop loss? Well, remember, you can earn in 100, for example, 100 in a row. You can make right. You can earn money. But if this one time you won't have right, this one time the market will go in a quite different direction that you thought it may go, well, you can lose all of your money. So my question for you is, how much this will be worth? Well, not very much, right? So most important thing is to control your risk. That is why we're using stop loss. That is why I'm starting with this. Okay, so where to set the stop loss? Well, if you are if you are having your strategy, then you are looking at the chart. For example, using support and resistance trading, right? Under support, you are seeing some support, and under this support you are saying, okay, it's a very low probability then the chart is going beyond below this support. It's a very low probability. So there is a place where you're supposed to set stop loss. So you're supposed to set stop loss there when you are thinking the chart will not go. So okay, the next thing is about take profit. So where should it be, this take profit? Well, first of all, of course, first of all, the important thing is we supposed to while creating our strategy, we have to say, okay, so this is a potential for long trade, and where we can set our take profit, right? So we had to start by setting, okay, this is the place when we can show it. And of course, the next question is, how much are you willing to lose? Because your risk determine your position. Okay, I have a question about how can I set my stop loss or take profit? Okay, so I will give me just a 1 second. I will show you in a minute how to set how to set your stop loss and take profit, because thank you very much. It's a very quite important to set these things, and of course I will show you just around in a minute. Okay, so going to web platforms. Okay, so I will of course I will show you on account how to set your stop loss, how to set your take profits, so you can know this absolutely how to do it. Okay, just give me one thing and one thing only. Okay. Okay, hope you are seeing this. Okay, so for example, this is we are looking at the chart of dollar to yen. So, for example, if our strategy is saying, okay, now we are supposed to buy. For example, we have a strategy that say, okay, we are going lower. Then we had a higher high. Then we got the lower. And then we got the lower low. Now we have the really strength candle, green candle. That means that the close of this candle was over this open, so we are making a long trade. So for example, okay, we just half a lot, 0.5. We just open a position. How to set stop loss in open positions? In open positions, you can SL means stop loss, and take profit. TP means take profit. You can add stop loss, and then you can just for example, you can write it down like 100, for example 106 dot fifth. Okay, and then you see how much is the in pips, how much is in the US dollars. Okay, so there is the one thing. Of course, you can do it, make it only you can also set stop loss, for example, in okay, so, you can set stop loss by just put it that way on the mouse, and then you are, for example, okay, yes, and we set it on 106.675, and now we can set at the TP or take profit, for example, in this point in the last. As we seeing them before, as we can say, the highest, the new higher high. Okay, can you hear me right now? Is everything now is okay? Please let me know. Yes, great, thanks. Okay, so this is setting a stop loss, and now in open positions you can see US dollar to yen, Japanese yen, stop loss, take profit. Okay, is the one thing, right? I can also close it because I want to show you how to do it. Okay, but if we were speaking about stop loss, where to set it, where it should be, your risk, how much are you willing to lose? And there is why I want to tell you about this thing we called risk per trade. And you can set risk nominal, for example, $100. Of course, you can set it on $10. You can set it on $200. You can just you said, okay, I will risk on one trade not more than this amount of dollars. Of course, you can use rand, right? For example, or any other currency. I'm just giving you an example on dollars. Okay, percentage 1%. It's a very popular methodology of setting risks. Is for example 1% of your balance. So it will be $100 if you have $10,000 balance. If you are if, for example, in your account is only $200, then your risk will be only $2, maximum 1% of your 1% of your balance, right, of cash you have on your trading account. So this is a very important thing to understand this, and of course back the next thing is, why should we use a percentage stop loss? For example, why 1%? Why not 10%, 50%? Well, it's a very simple thing. In 1% risk per trade methodology, you are setting 1% of your amount of cash at the moment. So if you have $10,000, for example, when you will lose money, when you will lose 1% in trade, your trading account will be only the 9,900, right? So you will risk 1% of this amount, and it will be $99. If you will lose, you will have on your balance, on your cash on account, $9,801. So you do the same thing, and then you can, for example, if you will have a free loss trades in a row, on your account there will be $9,702.99. But instead, if you would try the same thing, only just risking 10% of your amount, then you will lose 9,000. Then you will have 9,000, because you will lose 10%. It will be at $1,000. So next you will lose $900. So you will have 8,100. And then after 3 trades from 10,000, you will be lost more than 27% of your trading account amount, right? Because you had 3 trades before, you had $10,000, and now you have only 7,290. It's a very it's a very bad deal, I would say like this, right? So, and by setting risk, I am saying all of this because I want to show you an example on trading account, and to do that, I have to show you just like how does it work and how supposed to we understand what is it. Okay, so let's take an example of setting your risk on your trading account. For example, you are trading on euro dollar currency pair. It's the most volatile currency pair. No, also as a major pair, the main also currency pair, euro to dollar. Let's set our risk for trade $100. For example, like we have of course this $10,000 on our account, so we are setting this risk, okay, 100. So then we are setting our stop loss in pips. In pip, it is 20 pip. Pip is the 4-digit after dot, and if we are looking at the euro dollar, then one lot is equal $10 for 1 pip. So our stop loss 20 pip multiplied by $10 will be $200. So this means that if we want only to we don't want to lose more than $100, then this maximal risk for trade we took, then our maximum volume will be half a lot. Because why half a lot? Half of that, right? Half of 200, so will be 100. So if we will have more than 0.5 lot, then we will be very, very then we can in this case risk more than more than we just said to ourselves, right? So $100 is maximum. Okay, let's back to this example. So for example, I told you about this is the 4-hour chart on dollar yen. So I told you about setting stop loss and setting take profits. So, for example, setting stop loss. For example, if we want to set stop loss beyond this minimum, we saw this is the minimum that we had in on 13th of May. So yesterday we had this minimum, and we are saying, okay, there is a very low probability that this price will go lower than this point, in 106.70. So we are setting our stop loss is beyond this line, right? Beyond, for example, like on 106.6. And then, okay, so this is a stop loss, and we can also, let's click USD JPY, and then let's open this ticket. And for example, we are setting one lot. One lot is the contract value of 100 of the basic currency pair. In euro dollar, it will be dollars, right? In contract, this US one. Sorry, contract value is the value of the basic currency pair. So it is in US dollar to Japanese yen. It is United States dollars. It's $100. If we were, for example, in trading on euro dollar, then we could have, for example, 100,000 euros, right? So there is the thing. Okay, so this is the margin, right? The margin is the amount of the money you had to have on your account to open this position. This is the margin, right? This is leverage 1 to 500. So for example, this is a contract value of $100,000, and you can open only by using $200. So you now are seeing what a powerful tool you are having right now in the moment, because let's think about how much money you can earn by using this leverage. Of course, there is also a risk. There is why I'm talking about this risk. Nevertheless, it's a very, very great opportunity. I know this personally, how much opportunity the leverage is. Okay, so let's back to this setting risks. So for example, we want to set a stop loss at 106.65. So what can I see right now? $660. So it's very, very high, right? So I have to go like really, really less. 0.2, 130. Okay, I want to go below. For example, I want to go below this 100. So for example, I can use like 100. 0.16, it's 103. So let's 0.15, and it's $97. So okay, it's I can set stop loss right here, because in my personal opinion, in the strategy that I am using, I'm saying there's a very low probability that this price will go under the value of 106 and 70, right? So this is the thing. And let's remember 0.15, it's only 15,000 only. It's just $15,000, right? But then we have a margin $30 because it's a low contract value. So you are having $30 and you can open it. Okay, so we want to buy, right? And where is that take profit? For example, when I'm thinking this will go, for example, on 107, 107 and dot 70. Okay, so 107 and 70. So for example, I'm seeing this, it will be $48, and it will be in this area. Okay, because why I'm saying this where the take profit should be, because I'm suggesting the price is going up, and for example, a couple of days ago it went over almost 107.87. So in my opinion, during of my looking at my analysis, I can say it probably go there. It probably go there again, once again. So I'm using it. I'm using this analysis, also called as a technical analysis. So I'm also sure that you are heard about it. So okay, so this is the thing to set stop loss and set take profit. But if you will look at this stop loss and take profit amounts in US dollar, you will see that I am in this particular trade. I will lose. I can lose more than I will earn. I can earn, right? So there is the next thing that I want to talk about these basics of successful trading. So I show you how to set your risk, right? So if you are saying, okay, 1% or at least some kind of amount. So the next thing is about risk reward ratio. Risk reward ratio is the thing, how much are you willing to risk and what's your reward for that? In this trade, in this example I show you, I am willing to risk $97.25, but I can gain only $47.79. Oh well, the price has changed, so it's around $38. Okay, so risk reward ratio below 1 means that I can earn more than I risk. In this case that I show you, the risk reward ratio was above 1.0 because I am risking more than I am willing to gain. So there is the one thing. The second thing, risk reward ratio, because next thing is about the risk reward ratio above 1. So in this case that I had shown you, we are risking more than we can earn. Is it impossible to make money? Well, of course not. We can make money. We can make money by this kind of trading, but we have to remember that we are doomed to statistics, because we really are the prisoners of the statistics, because in this particular trading, in this strategy, when we are risking more than we earn, the high efficiency is required. And the next question is, okay, so how much high efficiency, how much high efficiency is required, how much how often we supposed to be right, how often we supposed to be on the right side of the market. And by the way, remember, there is no bullish side or bearish side, as we traders call, is the bullish. The bullish trend is when the prices go up, and the bearish where they go down. So there is no such things like the bullish markets and the bear markets, right? There is only good. There is only the right side of the market. So remember this. It is a quote from Jesse Livermore. So he was a quite great trader, really quite an icon, as we call it in the city. Okay, so back to the high efficiency. How are we supposed to set how often we're supposed to be on the right side of the market, right? So the expected value of the system, I don't know, have you ever heard about it? But it's a very simple formula, right? It's a profit multiplied by efficiency minus risk multiplied by 1 minus efficiency. I know it sounds a little bit complicated, so I will explain you in about right now, right? So, for example, we are willing to risk $100. $100 is our risk, and our profit is $200. And our efficiency, so how often we are right, how often we are gaining by trading, right? So looking at trading history, right? So when our efficiency is equal 30%, we have a very simple formula. 200 means profit, multiplied by efficiency, 1.4, minus 100, it's a risk, multiplied by 0.6, because 1 minus 0.4 is 0.6, equals $20. And what is this $20? It's the expected value of the system, means it is expected earnings per transaction. So if we will trade and we will keep our efficiency on 30%, our risk will be $100 and profit 200. So by efficiency 30%, we will still make some money. But remember, our risk ratio is equals 0.5. 100 versus profit 200, 0.5. Efficiency is in statistic. How much we are looking at the profit, how much of all our trades are profitable trades. So, for example, if half of your trade of your trades make you end on profits, so you are gaining every second trade, then your efficiency is 50%, half of that, right? Every second trade. So by mean efficiency, I mean the percent of profitable trades looking while looking on the all of our trade. So, for example, if we had 100 trades, but only 10 of them will be profitable, then our efficiency will be 10%. For example, in 100 trades, 100 trades with efficiency 30%, winning trades, our win trades will be 30 amount of our trades. So remember also that if our efficiency is less than 50%, we can also make money. But in this particular case, very, very important is risk-reward ratio. So Next, so the next thing. Okay, but what will happen if our risk will be, for example, 200 and our profit will be $150 and efficiency 30%? Well, in this case, we will have profit $150 multiplied by 0.4, 200 risk, right? 0.6 minus $60 expected loss per transaction. So, of course, everybody of you, you know the formula, right? This is the formula: profit efficiency minus risk. So you can, for example, calculate by yourself. For example, what will happen if we will have 50% efficiency and we will be, our risk will be 100 and our profit will be 150, right? So you can, like, using this formula, you can look at expectation about your loss per transaction or your gains. But the most important thing is to set your expected value under zero, under one, under, I mean, above $0. So you have to be on positive. You have the positive number, right? So you will have your system mathematically supposed to give you advantage. It's very important to remember this. If you are looking at the on the mathematics side, on the statistics side, you are seeing the quite potential of this strategy of your trading. Well, it's a very good sign. So remember. So just, when you are trading, when you are using a strategy, please remember to check this out if this will make you make profitable of your strategy, make profitable. Okay, so let's back on our example. Okay, so this is US dollar JPY. Okay, but for example, the same thing. Let's, for example, there was a breakout on the US dollar to Canadian dollar, and our strategy says, okay, so now we have to buy. So our profit is above somewhere right here. Why here? Because probably there will be a new maximum, but we are setting below this maximum because sometimes it will be retested, but won't be won't be breakout. So it can go down. So there is why, for example, we are setting 1.45 38. And of course, we are setting stop loss below this line. So how it will be? So it will be like, for example, setting 14538 and also horizontal line 138.745. So US dollar, Canadian dollar. Okay, open tickets. And the same thing, stop loss and take profit. Stop loss 1.3875. We are seeing that is a quite it's quite a lot, right? We said in our example $100, right? Of course, some of you will be able to risk much more, like for example $1,000. But let's focus on this example that we are using only $100 per trade. Okay, so we got 0.08, $92. Take profit 145.4538. So now we can check this out, and we are seeing that now our loss is $92. versus take profit 286. So now in this particular case, our profit will be much more is much more than risk. Our gain is more than risk. So this is when our risk reward ratio is below 1.0. Okay, so about the question just has been asked. This video is being recorded, so if you have any kind of problems, please please know that this is being recorded. Okay, so we are back to our presentation. So okay, so this is the expected value of the system, but now implementing the plan. Okay, so now I will come back. Okay, once again, hello, see me again. Implementing the plan, psychology. Well, it's a very important thing, and we cannot forget about it. It's a very, very important because your trader's mindset is really your trader's mindset will determine your tradings, how much can you gain as a trader, right? So just by saying, first of all, make sure your strategy has positive expected value of the system. So in this formula that I show you, profit multiplied by FNC minus risk multiply 1 minus FENC. So you can now check it, is it possible? So for example, if you are not quite sure, if you are, for example, 35% FENC and you are risking $100 to gain $20, you are not sure if this is profitable way, just calculate it, you're seeing, and then okay, so it's quite a bad idea, let's check something else. So this is the first thing. And the second thing is set aside expectation per transaction. So now you can see that between first and the second point, it's quite like I was supposed to send left, and then I'm supposed to say right. What do I mean by saying set aside expectation per transaction? Well, the most important thing is that we have to look at our system as a whole thing, right? Whole organism. So you are looking at the system. It is profitable or it is not profitable. If you use the formula that I just said show you, and you are seeing, you're calculating, and then you are you are looking at this calculation and see, okay, so this is a system that will give me can give me money, right? Because it's a because I calculated and I can earn. I'm not losing, but I can earn money. So now you're supposed to focus on this system, and you're supposed to focus how you are trading. So focus on when to make your signals, when your signals will appear. Where are you setting your stop loss? Take profit. Make sure the risk reward is good, good set. So, and then just forget about expectation per transaction. For example, you are seeing some opportunity, and you cannot look, for example, in this US dollar Canadian dollar trade I had shown you. You can think of by like, oh, I will earn $280, but maybe I will earn $2,800. So let's open 10 times bigger contract. Let's open 10 times bigger contracts, not 0.08, but for example 0.8. Of course, you can do whatever you want, but remember that you have to set aside expectation about this one transaction, because the system is the whole gain about how to use it is in the system. It's not in the single trade, because as I told to you before, and as I told my students before, trading is a process. Gaining money on financial markets is a process, and often we as a traders, especially beginners traders, right? So think about trading as an event. So one shot, I will make a fortune, right? I have to buy here, sell here, and I make this kind of money, and I'm incredible rich. Well, it's not the same. It doesn't work that way. It's a very hard work, and you have to focus about it, and you have to really want to gain something. You have to really become a trader, and you have to make it step by step. So the third thing is set your risk. Setting your risk is a I think it's a basic, right? Because plenty of traders are looking at the chart of the over this profit, right? Just as I said before, like set aside its expectations, right? If, for example, if you are if you are thinking, I can make, for example, $1,000, right? It's a quite good amount, so let's risk. No, don't do it, because first of all, focus on the risk, because you can control your risk. Unfortunately, you cannot control how much can you gain. Of course, you can take profit, but you don't know which trade will be your good trade, which trade will gain your money in your pocket, and which trade will be this trade that you just lose your money. So it's a very important thing to remember. You have to remember to setting your risk. It's a basic thing. Setting risk. The next thing, set aside your emotions. I know it's a quite difficult part. It's a very difficult part, because everybody wants to have a right. Everybody wants to be a millionaire, and so on, so on, so on. So set aside your emotions. If you are frustrated because you lost your money, getting back on the markets, right? So you want to make money today, so let's give you my money, the market, right? And you are like furious. Really, it's not a good advisor. It's a very bad advisor, because you have to think about the probability, you have to think about your strategy, and you have to think not about your next trade. You have to think about your next 100 trades. And if these 100 trades are able to give you money into your pocket, then good. Then you're in a very solid ground. Really, remember, I didn't earn money because of the one shot, right? It wasn't like this. Like I opened 1,000 lots and I gained plenty of money. It doesn't work that way. I work hard, and my money came to my account because I made couple of thousands trades, and of course many of them was unprofitable. Many of them I ended and I lose money, right? So it's a very simple thing. But remember, because when we look at the whole of them, we look at the whole my trading history, you will see this money, right? You will see that I earned it by by making it step by step. And that is my suggestion to you, because like, forget about this trade, think about next 100 trades, and always never stop exploring, always learning, and remember to take your chance, to take your shot, and gain the life of your dreams, and gain the life you ever want to live. So just do it. And as I told before, set stop loss, take profit, keep up with the markets. It's a very important thing, because you have to know where things happens, right? So if you are trading on a dollar, and there's a first Friday of the month, then probably today will be publications of non-farm payrolls, which is very important to US dollar, and also the American market, United States markets. So remember to keep up with the news, keep up with the markets, and beware of over trading. Trade when your strategy says, okay, listen, now is the time to trade. Now is the time to make. Now is the time to open a position, right? The over trading is the thing where, when you are sitting in front of PC, or in front of your smartphone, on your platform, and you are wondering where to buy, where to sell, so on, so on. No, just forget about it. Just only focus on your strategy. Your strategy says, hey, nothing is here, there is no opportunity right now. So just, take a breath, go for a walk, and go for sleep, meet with your friends, spend time with your family, because tomorrow is the second day. So, and every day is an opportunity. Okay, so guys, this will be all about as we talk about today's webinar, today trading course. Remember about this $200 free educational bonus for beginners. Remember, just as I said, it's really better to, when you are learning, when you are making your first steps, you can also make some kind of mistakes, right? So just be protected, protect from them, from these mistakes. Go for this 200 free educational bonus. Send an email to support@ccitraders.com. And guys, I wish you all the best, right? So I hope to see you on the top. I hope that you will be on my next webinar. How can one become CCIB or partner? Well, in any kind of questions, some kind of like that, please just contact CCI Traders, maybe your representative of CCI Traders. So that's it from my side. Thank you very much. It was a pleasure for me being today on this webinar, and hope to see you soon. Bye.